Welcome back, Liberty and Finance. It is Monday, May 3rd, and we were reporting with Steve Penny from silverchartist.com. I'm Elijah K. Johnston, your host. Again, this is a Liberty and Finance live stream. Steve, thank you so much for joining us today.
You bet, Elijah. Looking forward to speaking with you, and thanks for inviting me on.
Definitely. Now, it's quite an exciting day today. We're seeing silver jump about $1 and gold about $25. And this is right after the May 1st Silver Squeeze 2.0. Your perspective on what we're seeing in the markets right now?
Yeah, this is certainly a fun day to watch. It's not often that you open your screen and you see everything up like 5+%, to include the uranium sector, which is nice too. And I think this is kind of a early taste of what's to come in the months and years ahead. And I think what we're seeing today is just an early signal that we could be poised to resume this uptrend in the precious metals and commodities in general.
Now, we were looking last night at the market open. And I know the last time we had a silver squeeze, the silver price gapped up about $1.50. We didn't see any gap up yesterday when it just opened pretty much where it closed on Friday. Your perspective on what is really driving this move this morning?
Well, it's always hard to say what's driving the price in a single day. So I try and avoid that, and that's why I like technical analysis so much because I like to say price and volume precede the news. So you can interpret the price action, then figure out the reasoning for it later. But I think it's the silver squeeze 2.0 certainly has something to do with it, and I think that movement really has a lot of steam and a lot of power. And when the first silver squeeze happened, I was hoping that it wasn't going to be just a flash in the pan. And I've been pleasantly surprised that that has not been the case. In fact, more and more people are joining this movement, and we're viewing it as a marathon, not a sprint. So that's very encouraging to see.
Again, for our viewers just listening right now and joining on the live stream, we are with Steve Penny of silverchartist.com. And this is really the day after the silver squeeze, right? On Monday here, actually Saturday was the silver squeeze, but we're seeing this price jump in silver about $1 today. Now, if you have any specific questions for Steve Penny, just type them in the live stream chat right there, and hopefully we'll get to them. But really, I would like to kind of have you comment more on this whole silver squeeze movement that we're seeing right now. My perspective is it's a really great way for people to take hold of their finances, literally taking hold of something that's of real value and having it outside of the system. And it's a movement that's really helping people be aware of how fragile the financial system is and having them take control of their finances in that way. Your perspective on this whole silver squeeze 2.0 movement?
Yeah, excuse me, like I said, it's so encouraging, and I think in an era where practically everything is in a bubble and so much liquidity is being pumped into the system, you look across the markets and literally like everything is going up. What's in a downtrend these days? It's hard to find anything that's beaten down, and the one thing that stands out is commodities. Commodities are historically cheap relative to paper assets and stocks. Going back like 40 years, they've never been this cheap. So when people and generalist investors start to notice that, it would just be natural to zero in and say, okay, well, commodities are cheap. What are the cheapest commodities? And I believe silver is the cheapest commodity and really the most undervalued asset on the planet. And people are waking up to that. And the silver squeeze movement is really harnessing that and bringing attention to that. And one thought on that is I think there might be some people new to the space may be looking for like some kind of just parabolic spike, like price is going to be revalued immediately. And that's certainly possible. That can happen at any moment. But I think I just want to emphasize this has to be viewed as a marathon, not a sprint. As more and more investors and investor institutions take physical silver off of the market, eventually that's going to pit industry, the General Electrics, the Samsungs, the Teslas, against these manipulators on Wall Street, the JP Morgans, and that's going to put increasing pressure on the paper price. So, this is so encouraging to see this happen, but it's a marathon, not a sprint.
And one of the things I wanted to touch on, and we actually have a viewer asking about this, is right now we're seeing quite a big spike in silver right now, about $1. And Italian G is wanting to know, uh, is it essentially your perspective? Do you think we're in a trading range right now with respect to silver? And what price would be a breakout from that range?
Yes, that's such a great question. So from a longer term perspective, we are in a trading range. The lower boundary of that trading range is $22 and the upper boundary is $30, specifically $30.35. That's the high tick printed on February 1st of Silver Squeeze 1.0. So really, I think when we can get really excited will be a break above $30. And that's when I think $50 becomes the near term target. But we've still got a ways to go to get above 30, and 30 is going to be stiff resistance when we get there. But zeroing in a little bit here, we just today broke the series of lower highs going back to February 1st. Now, this is significant from a technical perspective because the institutional trading algorithms that really drive these paper markets look at things like this. So we made a new higher high today above the last high of 2674, and prices above a rising 250-day moving average. And those are other inputs that these institutional algorithms look at. So silver looks much stronger than gold here, and the trend is up.
And speaking of that trend that's up, you mentioned, two viewers are wanting to know, do you expect this rally to continue? This viewer asks, what is Steve's expecting the following days? And another viewer is wanting to know, will this silver rally continue this week?
Yeah, and rather, I like to say I deal in probabilities, not predictions. And I think the path of least resistance here will be for the series of higher highs and higher lows to continue. Now, does that mean I'm predicting that we keep going up like tomorrow? It is common when you get a nice breakout like this to come back and back test the breakout level. And that often presents a compelling point to re-enter positions or add to existing positions. So I wouldn't be surprised to see a little bit of a back test at some point in the near term here. But I think over the weeks and months ahead, the trend is now up. And that my baseline scenario is that we get near $30 again in the next few weeks to few months.
We got one viewer commenting how really silver is not the only metal up today, and that's true. A lot of metals are up today, and we're seeing gold up about $25. Andreas is wanting to know, if gold doesn't break 1800, will it keep consolidating or crash?
It sounds like Andreas, that's a really good question. And it sounds like Andreas watches the charts himself. And it's interesting, this morning, we came up to, I think, 1799 and pulled back just a little bit. Gold is still up really nice on the day. It's a bullish looking candle, but that $1,800 level is going to be key. And then getting above 1800, once we get above that, the next target becomes the 200-day moving average, which is currently 1857. And what's interesting about that 1857 level, the 200-day, it also coincides with the upper rail of this clear downtrend channel going back to last August. So that's going to be pretty stiff resistance in gold up near 1850, let's call it. But getting above that level, it's kind of like the equivalent of $30 in silver. Getting above that will likely signal, a really nice push higher in gold.
Now, with respect to the longer term, if you wanted to maybe pull up some charts here and kind of review for our viewers, kind of the key price points you're looking at for to really signal that gold and silver could be off to the races.
Yeah, absolutely. And I'll start with this chart for gold since we just talked about it. And just to confirm, Elijah, you can see my screen, right?
Correct.
Okay. Yeah. So here's that downtrend channel we were just talking about in gold. And you can see the upper rail here coincides with this yellow line right here. That's the 200-day moving average. So that's a confluence of resistance. So we really want to get back above there to signal a resumption of this uptrend. Once we get above there, the previous all-time high becomes the next target. But you can see right here this morning, we came up right to this $1,800 level and then pulled back just a little bit. I still think we're going to clear that $1,800 level in the short term here and then probably push up towards 1850 in the next week or two. I could pull up a chart for silver as well. And silver, this looks really nice. I didn't describe this to you, but you can see here this little downtrend line going back to February 1st. That was the first silver squeeze, right? Well, we broke this series of lower highs, and you can see this candle right here. That's a breakout. And this is coming on nice volume. That shows big money pouring into this, into silver, and it shows conviction. So like I said, the path of least resistance is higher in silver in all time frames.
So really what you're pointing to right there as we look at that chart is right. The price that we're seeing right now, the price rise of about $1 today is a breakout for silver.
It is, yeah. And the big breakout is going to be getting above this level up here, $30. But this is a breakout above a shorter term downtrend. So it's not as significant as, getting above this $30 level. But yeah, that is a breakout. You can see this red downtrend line. We broke right above that. My eyes come down here to the volume, and we have higher than normal volume. That shows conviction and bigger money buying.
And I'd like to get back to kind of the movement in general, kind of talking about that, the Silver Squeeze 2.0 movement, kind of getting back to your perspective on that. One of our viewers has a concern. They're saying, I'm worried about the short-term, those who are short-term minded, and we're just looking for a quick return on silver. We're just looking for this price spike and getting a quick profit, right? Your perspective on that, that maybe this movement is making people short-term minded.
Exactly. And that's why I want to emphasize this is a marathon, not a sprint. And, I want to set expectations right that, we're not looking for some moonshot this week or in the near term as a result of silver squeeze. I mean, that is an outside possibility, but that shouldn't be our baseline expectation. And what's going to make this movement sustainable will be people, look to dollar cost average. That's what I do. That's how I supported the silver squeeze 2.0. I buy on a monthly basis anyway. I've been doing that for well over 10 years now. But I just upped my purchases a little bit because it's a marathon. So if we get a lot of people, a couple million people or millions of people just continually buying every month, that's going to eventually put the big pressure on the paper price.
And mentioning the paper price, this viewer is wanting to know, really, Stone 881 is wanting to know about the paper price of silver and your perspective on really, how does it correlate to the actual physical price? Because, one of the things that has been coming about recently in people's knowledge is that, it costs a different, the price of a 1 ounce round, for example, is not just the spot price. You have a little premium above that, and the premiums have been increasing recently. So in your perspective, what is the best way to actually value, or what actually is the price of silver? Is it the spot price, or the price, for example, a 1 ounce round, or the premium on a 1,000 ounce bar?
Yeah, that's such a good question, because people, when you type into Google, hey, what's the price of silver? What you're going to see is the price set in the paper markets or in the futures market. And that price is based on supply and demand of paper contracts that can be issued at will by these bankers. So is that the real price of silver, or is it what it costs to get your hand on it? Because pull up, if you go to any precious metals dealer, you're probably going to pay $35 to get your hand on an ounce of a silver eagle, but the paper price is 27. So what's the real price? I would argue it's the price it costs to get your hands on it. A more refined answer might be the cost to take delivery of a 1,000 ounce bar, because that's the industrial metal, that's the industrial size. So you might say that's the price, but even those are seeing premiums, and 100 ounce bars are seeing premiums. So this shows tightness in the market, really across the industrial users, the retail investors, the mints, and the dealers. So I would say the price is actually what it costs to get your hand on physical metal. It's the short answer, which can be very different from the paper price.
Definitely. And for our viewers just joining right now, we're with Steve Penny of the Silver Chartist, silverchartist.com. And we're talking about the silver squeeze, right? That happened May 1st as the 10th anniversary of the crash we saw back in 2011. A lot of people banding together to get physical silver, buying physical silver this Saturday. And we're seeing a spike in the price this Monday, about $1 up. And kind of, again, about this silver squeeze, one of the things that really I like about the movement is that it's about really taking control of your finances, having something of real value in your hands. And you mentioned how there's this difference between having paper silver and physical silver. And I think when it comes to investing in precious metals, one of the main reasons to invest in precious metals is to have something that doesn't have counterparty risk. And when you hold in your hand physical metal, there's not counterparty risk. You have it right there. So kind of, again, your perspective on that, like the advantages of actually holding metal in your hands.
Yes. So there's many ways to play a precious metals bull market. And here's my simple formula is: one, get some physical metal stored outside of the banking system that you can put your hands on. That's step number one. I think everyone should start there. A lot of people see the potential in the mining stocks. And I'm heavily invested in the mining stocks, but I'm a strong advocate of holding physical metal first. Physical metal is your defense. Mining stocks are your offense, and it's your insurance policy against reckless and fiscal monetary policies that are prevalent in virtually every single country across the planet. So I think it's only prudent to have that. We all have insurance for so many things, right? Fire insurance, flood insurance, all these things. Well, those are probably very unlikely events. But continued currency debasement is all but guaranteed, and it only makes sense to insure against that. And the best way to do it throughout all of history has been physical metal stored outside of the banking system. So I think that's the place to start.
And when it comes to really this silver squeeze movement and the price spike that we're seeing, if we kind of again take a long-term perspective, right? We can't just be acting based on price spikes one day or a month-long price rally. We want to be looking at the long term. So kind of shifting to the long term again for precious metals. Did you want to share your insights with respect to where you see the mining stocks moving in the near future?
Sure. So from a long-term perspective, I think mining stocks present tremendous value. If I could pick one asset class to just hold for the next few years, it's going to be mining stocks. In a world where almost everything is overvalued, silver and silver miners are one of the rare things that are undervalued on a fundamental basis. As far as where they're going in the short term, my bias is higher. That doesn't mean it's going to be a straight line, but I think there's tremendous potential here for the mining stocks. And if silver is going to get to $50, which is a very sensible intermediate term target, the upside potential in these mining stocks is just tremendous. And we help people with that at Silver Chartist. But I give a fully transparent view of my portfolio and how I build that. But tremendous potential here in the mining stocks right now.
And one of the things I like to do is kind of, we don't know what the future is going to hold. So if we do look at gold and silver, and for example, silver, we'd all love for silver to break above $30, but that's not guaranteed. We don't know if silver will break above $30 anytime soon and head towards 50, although that's a possibility, So kind of looking, if you wanted to kind of pull up the chart maybe of silver, your perspective on maybe the worst case scenario, how long could we stay in this kind of consolidation period?
Yeah, I think that's highly unlikely that this goes on for, call it more than a year. I mean, I would be shocked if we're under $30 a year from now. But like you said, anything is possible. We deal in probabilities, not predictions. So here's a longer term chart for silver. I'm going to make this a log chart and just confirm you can see my screen, Elijah.
Correct. Now,
Okay.
actually, if you want to try sharing it again, it looks like I can't see your screen right now. So
Okay. Yeah, no problem.
Perfect. And once again, yeah, as we're waiting for the screen here, we're with Steve Penny of silverchartist.com. This is the Monday after the May 1st silver squeeze, and we're seeing a price spike of about $1 today.
So here's a longer term chart for silver going all the way back to 1979. So over 40 years. And what we see here is a really powerful pattern. This is a cup and handle pattern. So this is a big old cup right here. And then you see the handle, which retraces typically, about 30 to 40% of the previous move. So this is a really nice cup and handle pattern on a long-term chart. And what this tells me is that, we're very likely to get towards $50, but I think $50 will merely be a stop along the way to, even higher prices, significantly higher prices. But in the, as far as downside risk, I mean, you could pull all the way back to like the lower boundary of this handle pattern and still have this chart look bullish from a really long-term perspective. I don't think that's going to happen, but it's possible. Could we pull back towards $22? Yeah, that's an outside possibility. And if that were to happen, that wouldn't necessarily shake my long-term conviction at all. In fact, I know it wouldn't. But what I would hate to see happen if we do see weakness is that for the new people without that conviction to sell early and go back into the more conventional assets that are in record bubble territory. So I think having that fundamental conviction will allow you to hold through any downside volatility and experience the upside potential that is, I'm very confident is forthcoming in the years ahead.
And it is really interesting as we see this cup and handle that you're mentioning. If you want to share again with our viewers, what does that predict normally a cup and handle for the future price movements?
So the intermediate term magnet here is $48. So we got to, that was the peak in 1980 and here in 2011. But one simple way to project, they call it a measured move, is you can just take this handle portion and kind of flip it over. And that gives you a projected measure move from the top of the pattern here. So if we went up to call it $50 and pulled back towards, let's just call it $15 for even math, it's $35. So you add 35 to 50, that gives you an intermediate term target of $85 on silver, just looking at this pattern.
$85 on silver. So where it is today around 26, 27. What kind of an opportunity do you think that is, that kind of a rare opportunity that's really posing right now?
Yeah, silver, I believe, is the most undervalued commodity on the planet. It's the only commodity, to my knowledge, that's trading below where it was in 1980. It's like half of where it was in 1980. You can't say that for really any other asset in the world right now. In an age where everything is in a bubble, silver's like the anti-bubble from my perspective. Am I saying everyone should go all in on silver? No, but I think it does warrant a position or a portion of almost everyone's portfolio just because of the asymmetric setup here. Downside risk is minimal relative to the upside potential in silver. And if silver is going to 50 or 85, just imagine what these mining stocks are going to do. That's where it gets kind of exciting.
Andreas is asking a question again regarding kind of the possibility of a move higher in gold and silver. Is gold kind of an asset that is more predictable? He's wanting to know.
Yes, it respects clear technical levels a little bit more than silver. So you might have like a resistance level or a support level in silver, and you get these wild spikes that kind of go outside of it, where gold tends to trade a little bit more clean than silver. And that's typical kind of in investing and trading in general. The more, a larger market cap of an asset class, the cleaner it trades and the more it respects these levels.
So kind of for gold, it's maybe a safer bet, but silver maybe has more upside potential.
That's exactly right. Yeah, silver is going to be a much more volatile ride. Although I want to say that just because something is volatile, a lot of people conflate volatility with risk, and I wouldn't necessarily say that's the case. Just because something's volatile doesn't mean it's risky. It's more risky if if you're inclined to sell on the weakness when you should be buying. But if let's say I were closer to retirement and I were much more conservative, yeah, I'd probably be more skewed towards gold. However, the risk reward profile of silver is more favorable than gold over the long term.
All right. Well, Steve Penn, we really appreciate your time today. Really, this last minute interview. When we when we saw silver jump by $1, I'm like, we have to get Steve on here to really share with our viewers the insights of what's all going on right now. So, if our viewers would like to hear more of these interviews, they can go to libertyandfinance.com, sign up for the free email newsletter, and they'll get notified about all the interviews we're doing. And also, you can just hit the subscribe button here and the bell icon to be notified of all the new interviews. And lastly, Steve, if people are interested in learning more about your work, where can they find you?
Sure. You mentioned it a couple of times, which I appreciate. Thank you for that. Silverchartist.com. We do a free weekly newsletter. It goes out every Sunday. And the goal is to provide just a lot of value for free. We don't spam you. We don't hit you with any kind of high pressure sales tactics, anything like that. We do have a premium service. It's very affordable. We try and make it accessible to as many people as possible. It's like $9 a month. And that's a fully transparent over the shoulder service where I show members exactly what I'm doing and why I'm doing it.
Fantastic. Well, this has been a live stream with Steve Penny of silverchartist.com. I'm Elijah K. Johnson with libertyandfinance.com. If you'd like to support this channel, you can find information in the description of this video, how to acquire precious metals from us if you'd like to support this channel. So once again, Steve Penny, thank you so much for your time today, and God bless.
Thank you, Elijah.